Good morning, everyone. Welcome to the May 5th, 22 Teachers Retirement System Investment Meeting. And I'm going to call the roll. Thomas Brown.
Here. Good morning, Fed.
Good morning, Ms. Brown. Russell Buckley.
Present.
Suman Ray. How about Phil Dukes?
Some of the folks actually got put into the private room. I just left the room.
Hold on a moment. Ray.
Phil Dukes is here and Shuman will take over when he arrives.
Thank you, Mr. Dukes. And Allison Hirsch.
Sorry, here.
David Kazansky.
Present.
And Deborah Penny.
Good morning.
Good morning. Madam Chair and board members, we have a quorum.
Okay, perfect. Thank you so much. Good morning, everyone. We are going to start with the Passport Fund's March 2022 performance review.
Thank you. So good morning, everyone. Are we going to show things on the screen or no? Okay, so I am looking at the Passport Fund performance for periods ending March 31st. And I think that we're going to spend a lot more time on April performance in a few minutes, which is certainly much more disappointing than March performance, but you can see in the numbers on the first slide that developed equity markets in the month of March were positive. The Russell 3000 was up about 3.25%, and the international, well, the international equity composite was positive as well. Emerging market equities declined during the month of March, as did fixed income due to interest rate increases. But for the month of March, we can see that the diversified equity fund was up 2.3%. That leaves us with a year-to-date return of negative 6.1%. The return of the diversified equity fund was slightly behind its benchmark. That is largely due to performance of the domestic equity managers during the month and quarter periods. If we look at the balance fund total in the month of March, we can see that it declined about 60 basis points. Again, this is due to the fact that 70% of this fund is invested in relatively short-term investment grade bonds, which experienced a negative period during the month of March. For the year-to-date period, again, returns for the balanced fund option are negative 4.3%. The International Equity Fund recorded a modestly positive return during the month. The active managers in that sector of the fund actually added value overall. If we look at the year-to-date period for the International Equity Fund, again, we see a negative number, almost negative 7% the year-to-date period. Remember, that is a composite of not only developed markets, but emerging markets. The Sustainable Equity Fund, which is a large growth fund that is focused on businesses which are taking advantage of opportunities in sustainable industries, had a return, a strong return of 3.6%, slightly lagging the large cap growth benchmark for the month. However, for the year-to-date periods, that fund has had negative double-digit returns of almost negative 13%. Finally, we have the U.S. Equity Index Fund up about 3%. the International Equity Index Fund about flat. We can, I think for the sake of completeness, we should look at slide 3, which gives you some detail on the US equity managers. And those numbers have generally been disappointing for the month and the quarter. We see particular relative underperformance among the growth managers, which is not unusual in the broader manager universe. In fact, if you look at the Morningstar peer universes, you would see for the first quarter of 2022 that less than a third of large cap growth managers outperformed their benchmark for that period of time. It's a very difficult period of time for equity markets first quarter, and difficult time for active managers in the US. So happy to answer questions.
Any questions for Robin? Nope.
Okay.
Crickets. Okay.
Stealing ourselves for April.
Yeah,
All
yeah.
right, drum roll, April 2022.
Brace yourself for this one. So the preliminary monthly benchmark report for April, we did see a difficult month across the board for equity markets. So high single-digit losses in developed markets and mid to high in the international market. Particularly hard hit was the large cap growth funds in the US as well. So for the month, we've seen mid 8% loss for the month for the diversified equity benchmark. And calendar year to date, we're expecting to see about 50% loss as well. There is a bright spot though on the balanced fund. We did see a slightly better performance, and that's because there's a lot more shorter term fixed income in there. So we did see a loss of just over 3%. Again, on the international front, we did see a slightly better performance, although still at a loss of roughly 6%, and we're expecting to see a loss of about 12% calendar year to date. I think the best indication of the actual month performance would be the Brown Advisory Sustainable Growth, which is primarily on growth. We did see a loss of roughly 13%, and for the year, 24%. I don't know if I can end this with any good news, but if there's any questions, please feel free.
Any questions for Devin?
Sorry.
Okay, seeing none.
Thank you.
The capital market update.
Right, so we thought, given the volatility in capital markets, that it might make sense, although painful, talk in a little more detail about what happened during the month of April. And I know Mike Haddad and his team will be talking about this as well when they discuss the pension fund performance. But if we could look at the monthly market review and take a look at performance. Let's move to slide 3. And this is, I think this page is useful in terms of large asset classes, both equity and fixed, primary asset classes that both passport funds and the pension fund invested, and we can see them side by side. So if we look at the top right-hand corner, the table there, again, we mentioned that in April, the broad US equity market, the Russell 3000 was down almost 9%. That brings us to a year-to-date loss of close to 14%. I think it's worth noting, given the very, very strong performance we had in the prior 10 years, that the 3-year return for the Russell 3000 still is a double-digit average annual return of little over 13%, despite including this year. So this is 3-year average annual returns through April 2022.
Let's focus on that.
Yes, you know, we have been at this table for many years talking about the fact that returns were unsustainably strong in global equity markets, but particularly the US equity market. And that at some point we were going to have to live through some pain. And we're living through that right now. But I think again, it's worth noting that we're still seeing on a 3, 5, and 10-year average annual basis, double-digit returns for the US equity market. For international equity markets, you can see that on a year-to-date basis, slightly lower losses, 12% versus close to 14%. But over the annualized period of 3, 5, and 10 years, mid-single digit average annual returns. And we've known that too. The US equity market was really the strongest capital market among globally. If we look at fixed income for a moment, the Bloomberg aggregate, you can see that because of rising rates, we're experiencing losses even among high quality bonds. So for the month of April, we see losses of close to 4% and almost 10% losses on a year-to-date basis. On an average annual basis over the past 3 years, we're now at a point where fixed income, again, measured by the Bloomberg aggregate, which is sort of the universe of investment grade fixed income in the US, that return is basically flat. Over the past 5 years, we've earned less than 2% on an average annual return. So that's not exclusively the result of losses during the year-to-date period. It's really a function of having lived through a period of very, very low interest rates combined with losses on the year-to-date basis. We can see in the bottom left-hand corner on this slide a metric that helps to define and measure volatility in the US equity market. So this is the Volatility Index. On average, over long periods of time, it's about 18 or at a level of 18 or 20. We see the spike in April of 2020, and we see that volatility in the US equity market is currently much higher than typical. This is just a metric of what we all are reading about and living through every day. If we turn to the following page, this provides a little bit more perspective on US equity returns. And we've mentioned that growth equities have been, on a global basis, have been particularly hard hit. If we look at the top right-hand chart on page 4 and look at the Russell 1000 growth, which of course is the large cap growth index in the US. We can see for the month of April, it's down 12%. For the year-to-date basis, it's down just about 20%. If we compare that to the value index, we can see that for the same year-to-date period, again, through the first 4 months of 2022, the Russell 1000 value is down about 6%. Again, there are many explanations. One explanation of this very wide disparity between large cap growth and large cap value, which is actually the largest disparity in over 20 years. So large cap growth has not underperformed large cap value to this extent for the past 20 years. And one, I think, valid explanation is as interest rates rise, the rate at which you're discounting future earnings of these growth-oriented companies rises as well. And that brings the present value of those future earnings down, lowering the value of those stocks. So many reasons, but that is certainly one factor in the underperformance of growth. You can see that small cap has also been very hard hit, whether you're talking across the board, but particularly again in growth. Russell 2000 growth on a year-to-date basis is down over 23%. I think it is also interesting to look at, if we stay on slide 4 and look at the bottom left-hand chart. What this tries to do is give you a sense of the impact of foreign exchange rate changes on being a US investor investing in non-US markets. So if we look at the MSCI EAFE index, so again, that's the developed market index ex North America, And when we talk about returns in the EFI index, we're talking about it from the perspective of a US-based dollar investor. So we're taking US dollars, we're buying foreign currency and buying those securities. And so when we look at returns, we have to translate the impact not only of the company's stock price changes, but also any change in the exchange rate on our return. And so you can see, for example, that for the month of April, for a US-based, dollar-based investor, the return was about negative 6.4%. But for a local currency investor, someone who wasn't exchanging dollars for foreign currency and then back into dollars, the return was negative 1.3%. So that gives you a sense of how big an impact.
Okay, welcome. We are back to Teachers Retirement System back in the public session. Susan, would you like to report out?
Hold on
Certainly.
1 second. Wait, Deb. I don't think the stenographer is there.
I see him at the bottom there.
He is? Okay.
Yep, there he is. See?
He's
Hi,
there.
Jeff. Okay. Susan.
Okay, good to go. Okay. In executive session, we received some preliminary unaudited performance numbers for the pension fund and a market update. In executive session, we also discussed some board administrative matters. We received a presentation on an infrastructure investment. Consensus was reached. We received a presentation on a private equity investment. Consensus was reached. We received a presentation on a real estate investment. Consensus was reached.
Thank you so much. Does anyone have anything else? Okay, hearing none. Do I hear a motion to adjourn?
So moved.
Thank you, Mr. Kazansky. Do I hear a second? Second. Thank you, Ms. Hirsch. Any discussion? All those in favor, please say aye.
Aye.
Any opposed? Any abstentions? We stand adjourned. Thank you, everyone.
Thank you.